Fine, yes, you're fine. Very good. Good morning, guys.
Morning.
Good morning.
Hello, hello, hello.
Good
Happy
morning.
Tuesday.
Good morning.
Good morning.
Good morning, everyone.
All right. Okay, so this is Tuesday. Our Tuesday focus is underwriting and any and all questions related to deal underwriting. Napkin, detail, whatever questions you have, you guys are working on the teams. I see some of the new members from this weekend, so welcome, Bill, Yulia. I'm sure I'll miss some here. Ray, Sandeep, yes, Sujit. All right, if I'm not seeing, I apologize, but um, okay. So let's start with, does anybody have any questions on any of their deals, teams they're working through?
Yeah,
Good morning. Okay.
Good morning.
All right. So this is Olufunke. Good morning, Sanjay. So I have a question. So there is this property here is 2022 build. I believe I mentioned it very briefly about 2 weeks ago. 2022 build in Grand Prairie here in the DFW.
What's the name of the property?
Residences at 3000 Bardin.
3000 Barden. Okay, go ahead.
Yes. So after doing my underwriting, I realized that there's a vast difference between what they're asking for and what we valued the property to be, right? Perhaps I can, let me silence this. Perhaps I can share my screen so you can see what I'm looking at.
Okay, yeah, go ahead, share. I just shared mine. Go ahead.
All right, thank you. So please let me know when you can see my screen.
Yeah, we can see your screen.
You can see the underwrite. Okay. So based on their marketing package, right, the value of the property is 57.8 million, right? Buy now is 60 million, but call to offers is next week. And the broker told me they're trying to get people up to 55 million plus. So their marketing package comes at 57 million. However, when I analyzed their rentables, their T12, their rent roll, it's coming to 45 million plus, just a little over 45 million at market cap of 5%. Now, my question is, how do you value this premium, this $12 million premium?
Yeah, yeah.
That's on top. Is it because it's a 2022 build? If we have a 2022 build and a 1960 build that's pulling in the same numbers, how do we eventually value that property, considering the fact that the 2022 build, the nature of the property, it's still new, right? And it's still got a lot of value in it than a 1960 property. How do we explain that?
Yeah. So forget the hey 2022 build versus 1960 build or whatever, right?
Okay.
Forget that for a second, because when you're looking at a deal, you're looking at a deal and deal has to stand on its own, right?
Yeah.
To sense check, we always do various comparisons to make sure if a business makes sense or not, right?
Okay.
So with that said, brokers are brokers. They are working for sellers, right?
Mm.
And so they're gonna come up with whatever they're gonna come up with. And then you do your sense check, you do your numbers, you do your research, and based on that, you come up with your value, which you're coming up 45, right?
Yes.
So if you're saying the question you're asking is, hey, I did my underwriting and I'm coming with 45, they have 57, is that reasonable, right?
Yes.
Um, the and for me to answer that question, I'll say, hey, where are the differences between the broker and your assumptions, right? So scroll up and let's show me where the differences are. And the in the interest of time, right? The best way to look at is first you say, hey, let me look at the income. What
Okay.
is the income broker is saying, and what is the income you're saying in year one you can do? And I see there is 5.7 versus 4.9, right? There,
Yeah.
yes. Okay, so if that's the case, first and foremost, is it the difference because of the rent, market rent itself, or is it the difference because of the deductions? Deductions are vacancy, concessions, loss to lease, bad debt, right? Those are the four main concessions on multifamily. If you go to any other asset class, you'll have similar concessions, similar deductions.
Mhm.
The may be different. So I see average monthly rent, you are $40 lower than the brokers, right?
Yeah.
So
Yes.
talk to me a little bit about that. How did you come up with 1740?
This based on their actuals. The average monthly rent I have here is based on what they actually have. Their
Okay,
actual
so
home.
that's the actually what they have on the rent roll. So
Yes.
that's from the rent. Okay, okay. So you're saying you won't be able to increase that rent at all in year one, looking at the comps? And you may not have answer to this, but that's the thing I would, if you don't have answer, I would go look and see what are the comps. Can I increase the rents? If I can, see is 1780 a reasonable number, maybe higher, maybe lower, right? That's what I would look and do that there.
Okay.
And then the next thing is I see you're doing 10% vacancy. They have 5%. Why do you have such a high vacancy?
Because they are actually at 90%.
They're at 90% right now.
Right now, yes. He told me that when I met with him, the team met with him about 2 Fridays ago. He said, oh, they're now beyond 90%. They're about 95%, but he hasn't sent me the current rent rolls.
Very good. That's very good, right? Like perfect. And I would ask that question to the broker. If they haven't, you looks like you already did, and they're saying, "Hey, let me send you the info showing 95%," right?
Yes.
And then but once you get the information and you still don't see the 5% vacancy, running this property at a 5% vacancy, then I would push the broker and say, hey, look, I'm seeing this other property next door that is 90% occupied, similar rent or lower rent, and they're not, so how do I? And that's the conversation with the brokers. But that 5% would be a key difference, right, on the income side. And concession loss to lease bad debt, they are looks like doing 3.54, you're doing 5%. So to me, 5% is very reasonable. But overall, when I look at this, at 15% economic vacancy, 10% plus 5%, on a 2022 brand new build and Grand Prairie, right? So
Yeah.
I know Grand Prairie market generally it's a lot of demand, a lot of growth happening. 15% economic vacancy seems a little high for a brand new build. So vacancy is the one, but you have a good argument. Hey, they're at 90% right now. How will I push? How can I push? You need to have a concrete number there. And talk to me, okay, so other income, you're saying 708, that's the current other income. And broker is saying that can be increased by $110,000, right?
Yeah.
So what are the components of increase that the broker is recommending?
They have garages, single car, double car garages. They also
Okay,
have covered parking. So when
okay,
I looked at the rentables, because I was sent a spreadsheet on the rentables for these facilities, there was a difference between what they put in their marketing package and what the spreadsheet actually what I saw in the spreadsheet itself. So they are claiming that if we fully rent out these garages and the covered parking, they also have about 5 or 6 EV stations right now that they are not generating income from. But they claim that, of course, we can generate income from it. That's how they came about this number.
okay,
Their
okay.
actuals is this.
So I would definitely those are valid, right? Parking, you can always get an income, little additional income.
Yes,
But 110,000 a year is a lot.
a lot.
How many doors is this property?
252.
252. Okay, so it's a decent size, but 110,000 a year in other income is a lot. So they must have some other sources of revenue, additional revenue. Um, so I would look for that to see if you can increase the other income, or bake in what they're saying in other income as an increase. And that right there kind of explains the $700,000 difference in income between broker and this. So the point I'm getting to is you assess these and then you say, well, yeah, I can increase, I can go with the brokers. I'm not going to increase other income by 110,000, but I'm going to increase it by 40,000 because I think that's realistic. I can do this. Economic vacancy, and then you land wherever you land, and that's what you stand behind and stay with. And if it ends up being lower value because of that, then it is lower value. Not every deal is for everybody,
Yeah.
right?
Yeah.
And that's so. Looks like you did all the homework. Really, maybe adjust the other income here, and look at vacancy. I would think like if it's a 10% vacancy, that's a lot on a brand new build. So I was trying to see what the market looks like and if it's possible to push this higher on vacancy, push the occupancy higher.
Okay.
Let's look at the expenses. So scroll down a little bit. So on expenses, oh, so your expenses are actually lower than the brokers.
Yeah.
So broker is saying 2.8 and you're saying you can operate this at 2.7 million annual expense. So let's see where the differences are on expenses. Repair and maintenance, you have quite a bit lower. Brokers have 94,000. How did you come up with that $30,241 on repair maintenance?
But this was auto calculated by, this is Michael Blank's sheet. So
Mm-hmm.
these values, I just entered these and no, what am I even saying? These are their actuals. These are what
Mm-hmm.
they claim in their OM. These are their actuals. This is what I'm still trying to manipulate here.
So
Oh, I
I
see.
haven't
I
sorry,
see.
so
perfected
look,
Okay.
it.
uh,
So 3 and
you
4,
didn't
I
update the
haven't.
management fee. You didn't update the management fee on the projected and the offer on the Michael Blanc. So on the Michael Blancs, when you put in the management
Mhm.
fee on their marketing package, you need to update the other part. So it's their management fee is showing 134, 37. Meanwhile, on the projected, it's still showing 0. So maybe that's why you're
Yeah.
getting lower money as well.
Yes, thanks for that. I just actually, when I said that, I realized that, oh, I hadn't even manipulated the numbers. This is what was
Okay.
in this is what I saw in their documentation that they sent me, their spreadsheets after analyzing them. But this is what's in the OM. So I haven't really started tinkling with I and L yet.
Okay. Yeah, so and that's how you would manipulate the expenses and go through the subcontract services. A broker is saying they think it can be reduced by 40,000, the row 30. They think that general admin will be higher, right? So row 32, if you want
Yeah,
to highlight the row 32,
yes.
right? They think it's higher, and then you make your decision for your numbers, and then you come up with expenses, and then you look at the value that it comes up based on those your numbers. And if it's lower, it's lower, right? There's not
Yeah.
a um, so yeah, but that's how you would evaluate. And once you go through it, you can have a conversation with the broker and say, hey, look, that's what we're coming up with, and what are they seeing in the market, and based on that, go at it.
Okay.
Yeah, but good work, good work to this point.
Okay. Thank you, Sanjay. Thanks.
Yeah, thank you. Let me see. So is that one assigned to you, Olu, in Monday?
Let
It
me.
is.
It
It
is.
is. Okay, perfect. That's perfect. I'm going to share the screen real quick here. So this is the one we were just talking. I just searched on here. So this is assigned to you. Oh, and you said the call for offers is next week. So
Yes.
that's there. Okay. Oh, and this is an off market. This is not a through a broker.
It's through a broker, but they haven't put it on the market yet.
Oh, they haven't. Okay. Okay. Oh yeah. Oh yeah. So actually,
No.
this is a broker. This is a small broker, by the way. Um, and I don't think they have as wide of a reach as some of the other bigger brokerages. So this one is a good one to kind of
Oh,
dig in deep, and um, you can reach out to Evan and mention my name. I've talked to him before, not a deep relationship, but he at least knows of me.
Okay.
So feel free to
sorry.
negotiate
Yeah, I
and talk
think.
to them.
Yeah, so I think it's on market. I think this as I was looking at the property is if you look at GRE, GREA, they have
Yeah.
it on market as well.
Oh,
Yeah.
there's
Oh,
one
they have it.
there.
Yeah,
Yeah,
so
they have it on market.
GREA may be advertising either as a off market. Nobody has a contract yet, so multiple broker will try to advertise as off market. But once somebody gets a contract with the seller, then they're kind of exclusive after that. So feel free to ask the broker, um, do you actually have contract on this with the seller? Do you have exclusive with the seller?
He claimed he does have an exclusive with the seller because I asked him.
Oh, so Evan did say so. Gria may be just kind of doing it on their own, whatever, which they will do. So
They'll do. Okay. I'll
yeah,
him again.
my general rule, just the test is, if they're asking 55, which comes in at 240 a door, right?
Yes.
I think it comes in at I think we have 240 a door, and if market rents are 1758, like that's quite far from the per door price. I would think if the rents are 1758, even if it's a new build, 180 a door, maybe 190 a door, something like that we can do. Anything higher, low probability of the deal actually working out from a pure numbers perspective, because it's Texas, right? Because
Yeah.
taxes will be there. So,
Yes.
okay, that's good. Good. That's good.
Thank you.
Okay. What? Anybody else?
This Sandeep, I mean, I think in yesterday's call, I was mentioning as well. I mean, I'm working with a broker. I mean, the price seems pretty steep. I sent an email out to deals@massive.capital, but I would like to get to, the tools and things like that. How do I underwrite and stuff like that? And at the
Uh,
same time, what would be need some guidance on what would be a decent offer. I mean, there seems to be a lot of discrepancies or red flags in the way they have their pro forma, or rather the last T12. So I'm a bit hesitant to even think about what the right offer should be.
Yeah. So yes, so there are some of the tools that are there, and the steps to do the underwriting, do the napkin, the detail, and once you go through that, then we can discuss on this call, right? Like, hey, I'm coming up
Okay.
with this offer, this number, and that's the whole purpose. We kind of go through the cycle and go through that. So
Right.
and I know I talked to Mike this morning, so all the new folks who joined yesterday, we're going to be working on forming the teams. I
Mhm.
think the email that everybody got had a little survey to fill out to kind of show your preferences and stuff, and then team will get allocated. Then you kind of work through your team, in your team, to underwrite and bring the deal to this team. And I see Mike is here. Mike, you have anything else to add?
Nothing, just a couple things. That's great. And a couple things there is being sure you've got, get the survey completed and that you have your Massive Masters email set up and going. That's that will be the email used for the access for the tools.
Yep, I've already done that. Yeah.
All right, so we'll work through as we see that people got those completed, then we start onboarding them into the tools through the steps then.
Okay.
Just sharing that as the broad statement. So Sandeep, as you've gotten yours, then we'll be making the next steps to setting the tools up with those with those steps completed.
Yes.
Sanjay.
Okay.
Which is the same for everyone, which will be the
Yes.
same for everyone.
Morning, guys. Hey, I've tried to fill out the survey and it won't accept my phone number, so I can't submit it.
Hmm.
It says invalid phone number.
Maybe I messed it up when I was filling the form in.
Okay. And any of that stuff, of course, you can bring it up here. education@massivemasters.com. Just do a quick email there and
Oh, we
somebody
did.
will
Yeah,
pick up and
I
respond.
sent one off.
Okay.
Yeah.
We'll follow up. We'll get it.
Um,
We'll be on a lot. We worked on a few yesterday. We'll get on all the other ones today, cleaning up anything that people had items. So yeah, send them there. We're working through them, making sure everything's caught up for everybody. Correction on emails, correction on phone numbers, whatever it needs to be done.
Okay, cool.
Yeah.
Thank you.
Thank you both.
Thank you. Latoya, would you mind discussing that Collier deal for triple net? That napkin that you did?
That one's Ponder, and that was not triple net that we were
Oh,
chatting
I'm
about.
sorry. Yeah, it was not
Sure.
triple net. Yeah, the industrial one. Yes. So Ponder, yes.
Okay,
Would
shoot,
you
caught me.
mind?
Yes, I did a reboot on my computer last night, and none of my 50 million things are open. So quickly open these up. Let's see here. So Ponder, what I can recall offhand, it's listed at 15.8. There's 19 buildings, 34 units, 100% occupied, and pretty much at market for all of the tenants. They only have, thank you for that, they only have about 9 units that are coming up for renewal within the next year. So those are the only ones that could potentially, quickly be increased. They do not have any built-in rent increases year over year. They did give us one lease sample, and it shows that it's 3-year lease, and it's just that flat rent throughout the term. Let me open up the synthesis you actually sent back yesterday.
Yeah, so just to add to that, it's
Thank you.
it's an industrial flex type of brand new bill last couple years. Ponder, from Dallas Fort Worth area, it's on the northwest corner. And it's between Justin, Argyle, there's a little airport. This area is growing for industrial type of businesses, type of things. So, and the Haslett Haslett has been one of the like really, really exploding town here. That's the Alliance Airport that has been repurposed for logistics, freight and carriers and airplanes landing, taking off and stuff. So I think I'm not sure if it's the Fort Worth or which city, but or maybe a bunch of cities collaborating to spend quite a lot of money to update this airport. Once you have that hub, by air, bringing in freight and doing back and forth between FedEx, Amazon, Ford, GM, Facebook or Meta, a bunch of businesses in this area have like major presence now with warehouses and logistics center. So Ponder is a little bit north there, but another airport there and Denton traffic here. It's a growing good location, right? Just looking at just the area from that. And a lot of the information is in this OM as you read through it there. So based on that, we said, okay, it looks like in a good area, newer build, industrial flex. So let's look. That's where we started, or Latoya and team started. And once we did that, Latoya had, okay, are you able to share your synthesis now, or are you still rebooting?
Yes, I got it. Thank you for giving me that time.
Of course. So then from OM and the area, and somebody from your team drove by the area. You want to give
Yeah,
that
Gisela
update?
drove by. She drove by over the weekend.
9 months.
All right, guys, somebody's on. Please mute if you're not speaking.
I got it, Sanjay.
Okay, thank you.
Yes, I visited the area.
Okay, what you want to give a little of what you saw and what you looked and for the area?
It was definitely new upcoming area. There's still a lot of space, very rural on one side, and then lots of new houses, big houses being built, and some industrial places around, not as big as the one that we're looking at. And that one was in front of some older houses, but with lots of land around it. Everything was gated, so I wasn't able to go in, but it looked very well taken care of.
Yeah. So some of the things when I drive by places like these, and if you're going into an established city versus an up and coming city, it varies a little bit, right? So place like this, when I'm going, the things I would look out for. One thing you mentioned, Gisela, very good. Lot of new houses being built, right? Like the neighborhoods, the communities, you see a lot of new houses, right? Other thing I always look for is the roads and highways. Do you see roads being widened, new roads being built, new bridges? Like in DFW, you come a little bit east of Ponder, 35 and Preston and Dallas North Tollway. Like you go on any of those in north direction, you almost always you see new lanes are being added, new service roads are being added. So, you can go look at the plans and stuff. It's all public information, but physically visiting and seeing the infrastructure being added and being done is a good sign that, oh, it's expanding and more volume and more growth is headed this way already, right? So did you see highways or lanes and roads being expanded also?
I didn't see any roads necessarily being expanded at this point. There was one major road there,
Okay.
and that was very easy, very close to get. And they're building more, like gas stations and a lot of those areas where trucks and places to stop by. So there was a sign that was upcoming, like food stuff, fast food, and gas stations and things like that.
Okay.
So easy to get to, and I mean the roads were okay, good size to get to the facilities for now.
Okay, good. Yeah, so those type of things to see, but generally, so what I'm hearing is not very dense, some rural still, but some signs of growth and movement and construction. Okay, that's good. Okay, go
Sanjay,
ahead,
in this
Lata.
type of assessment as well, given that it's all industrial, they are a gated property. It appears that none of the businesses are customer facing. But at this stage, what kind of analysis would you be looking at for the individual businesses, or would you be doing any at this point?
Yeah, so that's a good point. What you're saying is, hey, look, there weren't any the customer-facing businesses, and we don't really need that in this case because these are more a little bit more like B2B type of businesses. So, and that's okay. That's just a characteristic of whatever type it is, and this is not an industrial park where customer-facing businesses are there.
Got it. That makes
So,
sense. Okay.
okay.
And so, yes, here's the napkin that we reviewed yesterday. This is the one that contained the updates that you made to the loan to value, and I believe there was a couple other things. I think the interest rate as well. So again, they're asking 15.8. The average effective rent right now is 3707. Average market currently potential is 3890. So they're not far off. And again, this bump up is just us factoring in the 9 units that are coming up between now and like the next 12 months coming up for renewal. So we're and they already put in the OM that the potential is getting these units to $12 a square foot, which aligns with some of the others that are already, currently at what they believe is market. So not sure why these few didn't come in at market, maybe some kind of concessions or timing issues, hadn't gotten to that point yet of asking. So we're assuming 60% loan to value. The cap rate is 7.9. So as of right now, they're asking 15.8. It looks like, the value may be 15.9, a little bit over 15.9.
You want to,
And
yeah, you want to talk about the expense ratio a little bit because that's a key factor here.
yes. So the expense ratio is actually only 17%, which is really low right now. Again, as Sanjay said, the property they started building in was it 4 years ago and just finished last year, so it's still fairly new. It's not triple net though. They are if I can minimize this so I can get that.
So you were able to, yeah, there it is. One of the sample lease that broker shared. Okay, go ahead. Yes, perfect.
Yep, getting to the utilities part. So the landlord is paying water, sewer. The tenant appears to pay electric. However, on the OM, they have a utility expense of about $2,700 a year. So we haven't asked yet, but I'm thinking they have a couple ponds. Maybe it's for the, electric to running the pumps, and, maybe common area lighting for the parking lots and, electrical for the automated fence. Because 2,700 for a year of electricity is not a lot.
Yeah.
And
Yeah.
then there's no gas. And then the tenant will pay all the remainder of the utilities or telephone, internet, cable, trash. But the landlord does also pay taxes as well. So this is
Okay.
how all of the
You want to
leases.
go to, yeah, so you want to go, oh yeah, the paragraph 6, landlord will pay all real property taxes, and the insurance is also landlord. So this is a pretty much a gross lease, like fully gross. Landlord is responsible for everything, pretty much. The electric and other utilities that they need for their business is what they are paying for. I'm surprised landlord is not providing trash because trash would be, you'll have common trash facility or something. But you know, lease is the lease.
There is actually a trash expense line in the OM. So
So
just
it
like the
probably gets
electricity,
allocated.
it's like a shared or something.
It probably gets allocated then. Yeah.
Okay.
Yeah. So if that's the case, right, taxes, insurance, and utilities is landlord, then and common area maintenance, there is a paragraph for common area maintenance also somewhere in this contract.
Let's see.
Hmm. Okay. It may be worded something differently, but
Let's see.
oh, landlord will maintain any common areas. I don't think this has any elevators or anything.
No.
So landlord is responsible for common area too. So yeah, so 17% expense ratio is in Texas is, I mean, no matter how new you build, you're not gonna operate at a 17% expense ratio. Oh, it says tenant is required to maintain. So the AC maintenance is tenant. But more than likely the capital would be like replacement and stuff would be landlord.
That is the case, yes.
Yeah, that's good at least that the tenant is doing AC maintenance because that summer AC breaks when that happens. You don't want to be that hassle for this.
Based on
Okay.
the spaces looked from the photos in the OM, why is this not letting me trying to get to the OM? Sorry, I have so many things open. Now that I'm screen sharing, nothing's functioning properly, of course. I'm trying to get to the OM. Where are we? Okay.
Ooh, all your party pictures are now revealed.
That's our team stuff. We were putting our photos on the Candela flyer.
All good, all good, yes.
So it looks as though like these tiny spaces may be the only thing that's air conditioned within the
Okay.
within the unit. So they, these are probably just those wall
The
portable ones. Just making
offices, yeah.
assumptions. Yeah,
Yeah.
educated assumptions there.
And just looking at that picture, looks like even the rest of the space may be insulated because the ceiling looks insulated. If it is, the rent's potential may be higher. But go back to your underwriting. The current rents are about $12 per square foot, right? Because those are $1.09. So the cell N7 is $1.09. So that's like almost like a $14 per square foot per year. Which is a pretty good rent for these, especially Ponder is a little bit out there. So you use the expense ratio what they currently have, but change that to 35% just for your napkin underwriting, right? Because 35 for a new build and this industrial flex will have a little bit lower than your residential because residential have a lot of toilets and a lot of plumbing and a lot of movement, whereas this is business. So with that 35% expense ratio, market value at current rents and a 7 cap comes at about 14 million, right? So I'm looking at the cell S20. S20, yeah, there it is. Right? So 7 cap is 14, 6.5 cap is 15, which kind of gives you some ideas on what you can do and where generally it would fall in and then do detail or not. And then since there is not much rent increase, there is not a whole lot of value add, so to say, right? And if there is not a lot of value add on a property on a project, then I just want to buy it at a high enough cap rate that there is cash flow, right? So I think what we end up, if you go to dashboard, I think we end up doing like 11-ish million assessment because that gave us, if you go to P&L, that was giving us a nice scroll down a little bit, 7-ish million, oh, it's not million, 7-ish% cash on cash. Scroll down a little bit. Scroll down, there it is. So yeah, so row 60 is where it shows the cash available from the operation to distribute, right? And then, I mean, that's a decent cash flow there on a 4-ish million raise that this was needing. So anyway, so go back to broker, have a conversation around, like we're around 11 and a half. If he says, oh no, we're getting offers at 14, 13 million, then it's a pass. If they say, oh, we're not hearing anything, getting anything, then we can go ahead and look at moving forward or doing something more.
Okay, we plan to do that today. Make that communication.
Perfect. That's good. Okay. Anybody have any other questions so far? Any team does not have any deals to work on or deals allocated to them. And I know the people who joined this weekend, they may not have yet, so we'll work through this week, and if you don't have deal flow, we can allocate. But
And I guess you also, I missed the beginning, Sanjay. So any teams that are towards being ready to get in front of the Lions Den with a presentation
this Wednesday, yeah.
This Wednesday and next Wednesday both, just so we can get the lineups, get those lineups set up.
Gentlemen, I have a question, if I may, since there's no raised hand about
Go
presentation.
ahead, Yuli.
So we obviously very, very fresh, and we may also not be able to jump on for our personal circumstances on the teams, but I have a full-time VA working for me, doing the marketing for commercial, for residential real estate, which I would like to shift that resource to the commercial. Is possible to get with one of you on a call just to set a personal call to check what should we do best? Maybe you can give some ideas so that we can look for the specific deals in specific territory, because we would like to start doing marketing.
Yeah, Yulia, sorry, I couldn't get to you yesterday. I got your text, but Mondays are a little crazy because we stack
No
a
worries.
lot of our calls on Mondays. But yeah, we can do a quick call, and you want to set up your deal flow with VA and stuff. Absolutely. We can share what we have set up, what we're doing, and you can kind of plug into the same
Just let me
thing,
know
or
when you have a moment, and or send me invite. I will adjust my schedule to yours. And yeah, don't apologize. Monday is crazy. Same. I wasn't expecting respond right away, but I just thought I'll let you know.
yeah, today afternoon I should be good.
Sanjay,
I'm not available today afternoon. Sorry. Let's just try to push it towards the end of the week.
yeah.
Okay.
And Sanjay, why don't we look at making that exercise on Thursday as well,
yeah.
just for people like, hey, how are you finding deals? Just that.
Yeah, that would be great, because I was trying to see if there is some existing calls to go over it. I went through the training material. I find the field presentation, which I've seen before. But as I said, I just want to have a more practical, maybe tips.
Yeah, so Friday call is that actually. That is the purpose of Friday call. So we can do that on Friday morning, 9 a.m. Does that work?
Yeah, that would be great. So then
Perfect.
we don't necessarily need to.
Oh yeah, Friday. Yeah, perfect.
Perfect. Sounds good. Awesome. Thanks, Mike.
Yeah, because that way I know everybody else got to have those same the kind of tweaks and tips and tricks and stuff that we covered at a high level, and we can go down to that next level now.
Yes, perfect. Sounds good. Okay, back to Mike's question. If any teams ready for this Wednesday, let us know, reach out. You guys want to finalize this industrial flex one, Latoya, we could look at this one. And to that, what Phil and Shinoa say, and what I love is drawing that line in sand, right? We will never have enough time, and I can allocate like a month to something, and I can allocate 2 days to something, and I may come out with a very similar presentation in this case, or similar analysis, because I know what I know. And then the feedback that I get is where the real growth happens, right? When you go in front, you talk, you do that. Latoya, Giselle, if you guys want to take this one and bring it to presentation, it's a lot of hustle for today, tomorrow, and take the template that we have on the portal and work through it, talk to broker, push for it. Your recommendation may come out, oh, this is not a good deal to invest in at asking price. We are recommending this. That's what we do. And that's fine, right? That it's not a deal to do, but presentation-wise, the feedback you get, you're preparing yourself for the next one. So just think about that, Latoya, and let us know if that you guys want to push for it.
Okay, we can chat about it. Thank you.
Yeah, perfect. Awesome. Okay, any other team does not have a deal allocated or they don't have a deal to work on? Okay, everybody's got something. Leo, I'll ask you, put you on the spot. Did you get a feedback on your the two deals that we underwrote we were talking?
Which one? Sorry.
The Odessa was one?
Oh, no. The Odessa one, there's a portfolio buyer that's buying all the
Oh, that's
12,000
right.
yeah, the
Yes.
12,000 unit. So I think they are under contract. So they prefer the portfolio buyer. I think they are buying it for 85 million.
Okay, yeah. Stay
Yeah.
in touch with the broker in case it falls, right? So,
Okay, no
and
problem.
then the other one was the North Carolina you were looking, Fayetteville.
Yeah, so the call for offers is next week. So I'm just waiting for I think they are waiting for everybody to send in their offers. So I'm gonna send my offer. I'm gonna send the offer on the call for offers date.
Yes, that's the smart thing. Don't send your LOI too soon because sometimes, not all the time, brokers will take your LOI and shop others and bid it higher.
Yeah,
Brokers are working for the sellers, right? So they will use your LOI to go to somebody and say, "Hey, look, I have an LOI this price. You gotta
right.
come up higher or do this." And that's a trick. They do that. So that's the John, I did get your email, and when I went to forward that to you, it was actually a storage deal that I was looking at. So, and not a mobile home. I kind of put storage, mobile home, RV park in the same bucket in my mind for some reason. I know they're not the same, so that's why I was a little. But yes, so that's why I didn't forward that to you. So storage is. It's a little bit out of it's in Lufkin, the storage deal. I would like to take a deeper look at that, but
I
so
can
I
I
don't
can
think
do that also. So that's okay. And my wife and I are opening up our minds to RV parks as well. So if you need additional help on that with the existing teams, we certainly could be a part of that as well.
okay. Yeah, in that case, let me forward that. I will send that.
All right, thank you.
Awesome. That's good. Um that's good. Okay.
Hi, Sanjay, may I ask a question?
Go ahead.
For wholesalers, for commercial, is
Mm-hmm.
it a very similar kind of thought process to residential? So like the same things to look out for, or is it like a totally different ball game with good and quote unquote bad wholesalers in commercial?
Yeah, so few things are similar, right? Wholesalers are wholesalers everywhere, right? Like they want to focus, do legal contract, get some money on the line and push. The little difference on the commercial side here is that um, there is a lot more involvement from the wholesaler than the residential because we need the T12, we need the rent roll. If we are in a ballpark, wholesaler may even organize a call with the seller directly, and seller may rely on our credibility to kind of move forward or do something. So the relationship, you got to be very careful, similar to other wholesalers, but relationship is a little bit more, a little bit deeper from that perspective, and they should get the T12 rent roll and verify the T12 rent roll. Those look right and look for the red flags on the documents provided and stuff. So
Okay.
yeah. Okay, so
So,
well,
Sanjay, can I just expand on that a little? So
go ahead.
in residential, obviously, the wholesaler is selling an equitable interest in a contract. But in commercial, that contract, they're not going to go forward with the contract. They're basically supplying a qualified lead.
Yeah, good point. Most cases, wholesalers in commercial will not have a contract,
Right.
and they will be almost 100% of the time I've dealt with, they'll ask to sign a CA, confidentiality agreement, before sharing T12 rent roll, maybe even the property address. And as a rule of thumb for us, for me, unless it's one of the licensed big brokerages, like Collier, we just saw, Marcus and Millichap, JLL, GRIA, I don't sign a CA because when the deals are floating around, we get deals from multiple sources. And you may also, as you get out in the market and start targeting the deals. So any wholesaler, I don't sign any CA because I don't want that a stupid document for me to, kind of stop me because somebody else had sent me. I have documents and everything. And once I push back, most wholesalers are fine with it because they need to find a buyer, right? And what I always say, I am the buyer. I am the real customer for everybody. I am the one who's going to pay, that everybody's going to make the money from wholesaler, seller, lender, insurance, title. Like everybody makes money when I sign on that dotted line. I have the ultimate authority. I am the customer, right? So you all have that power when you are talking to the wholesalers, not the sellers, right? Don't be a mean asshole, right? But so behave humanly in a human behavior. Keep that, of course, but have that in your mind, like have that authority in your mind. So wholesalers will push for that CA. I don't sign that CA unless it's a licensed brokerage. And and what we were talking earlier, as soon as a wholesaler sends something, my first question is, do you have exclusive? Do you have a contract? And they may say, oh, we don't have a contract or even representation contract, right? But wholesalers, they can't lock it up a commercial side because the values just vary by millions, right? Especially as you start to get above 100 unit deals. Good question.
Okay, thanks.
Okay. While we have 5 minutes, any other questions, guys? If no other questions, I will share the really quick the napkin underwriting template. I know we have some resources, but in person is in person. The napkin underwriting template. What is my napkin underwriting? By the way, the napkin underwriting template we have is a very powerful one. Ooh. I will start with it's the similar one that Latoya was sharing and showing on the screen, and just the flexibility of this template is I want to kind of go over. So you all saw this napkin here, right? And yeah, it says multifamily here, but right below it in the template is the new development and retail. But remember, the key numbers you need to know are our expense ratio cap rate, and cap rate, you can do a sensitivity here, and your rents and number of units, right? Like these blue cells is all you need, the information. And as soon as you have your average rents, average market rent, expense ratio, and cap rate, you can calculate your NOI, your income, your values, do some sensitivity. And when I'm doing the napkin, all I'm doing is I'm kind of looking for range, right? I'm not looking at an exact, like, oh, can I get a pinpoint exact number? If I'm kind of in the range, I'm really liking the area, really liking the market and other aspects about the property, I'm gonna go do the detail. But it's a really powerful, and quite honestly, if you think about this, you can use this for any business where you're just trying to figure out what is my total income, what is my expenses in a ratio, in a percentage, which is, for every type of business, every type of asset, it's kind of in a certain range, but it does vary based on the market, the age of the property and stuff. And you can get some idea of the expense ratio by looking at some actual numbers in Red IQ, right? That for multifamily at least. So that's always there. And then the new build, the biggest thing you need to know is number of units or the building square foot, building footprint. And, as soon as you put in, you're building 24 units, average square foot of 800, and let's say you're building a retail, total retail square foot of 20,000, it kind of gives you the total cost of construction. Of course, there is an assumption here. And then if you're buying the land at certain amount, it gives you your cost, high level cost to go in. And we assume a 10% development and overhead, just kind of a rule of thumb, but it can vary drastically, by the way. So but this is a napkin, right? And once you have this and you say, oh, I'm building 24 units, my average rent is $2,000 for retail. My average rent is, I don't know, whatever. I'm just gonna put some numbers. The numbers are there. My expense ratio for brand new build, 40%, 6% for triple net. If it's not a triple net, if it's a gross, you can change the expense ratio. And for different cap rate, it gives you your value right here. And it compares the ratio to your expenses or total all-in cost. Just based on this, I can decide like, oh yeah, is it worth it? Is it not worth it? Right? Like average rent of $2,000. And if you think about this, if I'm getting a $2,000 rent for a 800 square foot unit, that is approximately $2.50, right? Just approximately $2.50 per square foot. And if my construction cost is $184 per square foot plus land cost plus development cost, it's more than likely it's going to be hard to work it, right? If my construction cost was $110 per square foot all in, all of a sudden 6.7, and look, this is a nice profit even at a 7.5 cap. At a 7 cap, it's a nice profit there. And the deal may be interesting enough to look going forward, right? So these napkins are very powerful. And you can do scenarios, you can change numbers and see, how these move, and then do you want to move forward or not? I'll pause here. Questions?
Hi, this is Tiffany. I have a question with that spreadsheet you were showing.
Hey, Tiffany. Yeah.
So does it apply? This, I'm sure, like it applies to multifamily and mixed retail, correct? Are there things that we would have to adjust? For example, if we wanted to use it on a different type of class asset, let's just throw out there mobile home parks. I'm on John's team, or something that's a little bit different from multifamily and retail.
Yeah. Yeah, so you can use this for any, even I would say business and any asset class for sure. So for mobile home park, your expense ratio would be different, right?
Correct.
And that's always the key is that whatever asset class you look at, you kind of need to know your expense ratios. But you have your number of units. Let's say you have number of pads for your mobile home park. You really don't need the average square foot for that, but you're trying to come up with the average rent here, and that's what gives you your revenue. But I would put in some average square foot number here to get to the cost to get the pad done per pad, right? If it's an existing one, then I would just go through this and you put the number of pads, what is the rent per pad, what is the market rent, what is your expense ratio, and based on your NOI cap rate, you come up with your value.
Another question though, for example, with mobile home parks, sometimes the tenant owns the home. And so then the lot rent is different from, say, somebody doesn't own the home, so they're renting the lot and the home. So there are two different prices typically. One is just,
Yes. Yeah.
renting the dirt, while the other, so, and that's the same for RV parks as well, right? Well, no, that's
Yes.
different actually, but yeah,
Yes.
how do
So
you split that, or do you still do an average because it's kind of a back of the napkin calculation?
yes, yeah. So in apartment complexes, same thing. I have a lot of different type of units with very drastically different rents, right? So that's the beauty of the, oh, now I lost. Where is my napkin? The beauty of this is like I'm using an average number. So if you have a one mobile home park where you have, let's say, 50 pads and all 50 are owned by let's say the park. So you're charging $400 pad for the pad, and let's say 800 for the mobile homes. Your average rent is a lot higher versus 50-50 versus none owned by the park, then your averages would change. So I would just, for napkin analysis, I would just bake that into the average. If you want to use this table to kind of calculate your averages, it's a little bit easier, even though we use this table mostly when we do the detail underwriting. But for napkin, if you got a lot of variation, just punch in the numbers here. It comes with the average, and at the bottom, it gives you your average rent per door given the units. And then just use that number here to do the napkin.
Okay. All right, great.
Yeah.
Thank you.
Yeah. Good question. Good question. Yes. Thank you. All right, guys, after 10, we'll stop here. And tomorrow's call is capital raising. And we'll see you tomorrow. And we'll go from there. Thank you,
again,
guys.
Thank
Happy
you.
Tuesday.
Sanjay. Oh,
Yeah.
just
Thank
again, a
you.
reminder, if anything comes up or you guys find some errors or something about the onboarding or the messages that are coming out or stuff like that, send it to education@massivemasters. I'm going to put in the chat one more time. Just help make sure we got everything aligned with everybody. I see it's a couple things here and there we're cleaning up, and we appreciate the feedback on it. So if you share it there, education@massivemasters.com, really appreciate it.
Hey, Eric, I just see your question in the chat. I would use the website portal, the template there. And I know the menu is a little hidden right now. Do you have access? Do you know
it
how
should
to
be there
navigate
now.
to that? Oh, it's there now? Okay, let me check.
It's a
I think I might have been, I was confused. I might have corrupted the copy that I made. I was getting value signs all through my,
Oh, you need to, so go, Sanjay, go ahead with finding the portal over there. Everyone on, if you're, using the spreadsheets, you need to download, open it, not use it in the web version. They will not work correctly in the web version. So right there, Sanjay, is your resources, right? Resources and tools.
Resources and tools.
Second
Oh,
one on the
yeah.
left.
WhatsApp groups, templates are.
So it doesn't come straight out. Okay, but then you go, yeah, so then it's here.
Okay, yeah. So resources and tools, templates. Yeah, so Erica, if you actually, just use the web version, then it opens up as a Google Sheet document. That's where you see the errors. But so you have to download it and open it as an Excel, and then all the errors will go away and it'll work.
Yeah, that's right. I was anticipating that might have been it, and I just thought maybe I corrupted it. But
Yeah.
thank you for that. 'Cause I was
Good
all the
try.
other little
Good
keys
try.
work, but yeah, downloading it first is a different path. So
Yeah.
thanks for that. I
Yeah.
hope it helped somebody else.
Perfect.
Yeah,
Perfect.
thank you.
Thank you.
All right, have a
Yeah.
great day, everyone.
You too.
Thank you. Have a good day, guys. Bye.